Hi, this is Euro US dollar weekly chart, and we are waiting for the markets to open on 29th of April 2013. Now it's the weekend and markets are closed. Let's see the big picture of the pair. I have added the ICHIMOKU KINKO here system on my chart. I want to see the big picture. Let me have a look at the monthly chart. The monthly chart shows a KUMO cloud which is almost horizontal. It is bearish, and there is a raging attitude and a consolidation. If we put trend lines here, we will see that price is forming a triangle. You see that there definitely is a consolidation, but there is room for profits even within this small span, although at a certain point there will be a breakout either upwards or downwards. There is room because we are talking about monthly candles here. So it wouldn't hurt if we have a profit for a big candle as like this one, upwards or downwards. We will see what our system is going to show us. So I'm going to remove the lines and have a look on the weekly chart. Here the leading KUMO is bullish, but its edge has curved downwards, which shows that there might be a downward move before it resumes, or we may have a hiccup here and then it may go again up. The price is moving inside the cloud here, and there is always a resistance, a support zone inside the cloud, and it finds difficulty to break out of it. But if it breaks out of it, and if the momentum and the sentiment of the market remains bullish, then odds are that we are going to see an upward move. Let's put Fibonacci retracement tool here to see, compared to this wave, which was an upward wave, if this wave here was a correction, which, as these candlesticks show, possibly ended, therefore we have good possibilities for the price to go, maybe not as high as here, because you saw that there is a triangular pattern here, but at least up here. So I'm going to magnify this a bit to make things a bit easier for us, and I will draw the Fibonacci levels here. Don't get confused with all these things. I explained to you my thinking. So yes, that was the main trend for a while. Then we had a correction which almost reached 61.8 Fibonacci ratio, and then it started going upwards. So this move here must be considered as a secondary move, nothing to worry about. How far it can go, how high, maybe it will not reach this point, but it may go at least up to 1.33 here. So from 1.30, where it is now, up to 1.33, it's a good profit margin. So let's delete the Fibonacci levels now, and let's go back to our system and see how things look from the daily chart. On the daily chart, we see that the price had a huge dip, and then now we see here the bearish Kumo, which was formed, but it was rounded up, and we see here all this effort which took place here, which is a reversal, depicted on the Kumo here. And then, right when it was ready to become clearly bullish here, and we had this strong candlestick ready to penetrate the Kumo, suddenly the market decided to go down again, and we had this formation of the leading Kumo, which was reinforced by those bearish candles, and at the end of the last few days, the sentiment tried to reverse again to the bullish direction. So we have this crazy edge here, which is bullish, lower than the previous bearish Kumo, but definitely bullish. So although the conditions for the ICHIMOKU system are not 100% bullish, and as I like to say, and as I write in my books, there is no emergency in Forex, so nobody has put a gun on your head telling you to trade. But if you still want to trade, then biases are bullish. We have the Chiku span line here, the green line, which is turned upwards, but it's below the Kumo, so it's a weak bullish confirmation. We have the price above the Kijun-sen, the blue line, which is also bullish signal, but because it is below the Kumo, it's weak. We have this crossover here, Tenkan-sen above Kijun-sen, but because it happens below Kumo, it is bullish but weak. So with all these weak signals, if you are aggressive enough, seeing that the leading Kumo is bullish, you can go and enter here, putting your stop a few pips below Kijun-sen if you don't have a big account, or even better, a few pips below the lower border of the Kumo, which is Senko span A. It depends on your account's tolerance, how much your risk should be. Your risk, the pips between your entry point and your stop loss, should not represent more than 3% of your account's equity. If they represent more, choose a smaller time frame. Let's go and see how things look at a smaller time frame. Your target profit will be when one of your terms or all of your terms reverse. So let's go to the H4 chart, and here we have a different picture. We see that the leading Kumo is bearish, and it looks like there is an effort for the price to go upwards, but we can have serious doubts that it will manage to go upwards. So our Chiku span here is below price, so we definitely don't enter log. The Kijun-sen is, the Tenkan-sen is above price, the Kijun-sen is almost above price. So I wouldn't enter. I wouldn't enter because as many possibilities there are for the price to go up, the exactly same possibilities are for the price to go down. So if you want to risk, you shouldn't do that from this time frame at least. Go to a time frame where odds are to your favor more. On the H1 time frame, we see leading Kumo. First of all, Kumo is horizontal, not a good sign. Price moves sideways. There is consolidation. Leading Kumo is bearish, and although there is a curve here showing reversal, it has depicted this effort of the price. We will see if it will manage to go up. Let's go to the M15. M15 shows that Kumo is horizontal, but there is a sharp edge here turned upwards. So that's good. We would enter here long. We had a Kumo breakout, but price goes horizontally sideways. So when we see Chiku span going clearly above the price, but up to the open air here, not touching the price, and once we see that there is a definite trend of the price to go upwards, clearly upwards, we can enter long here from the M15 time frame. Our stop, we can put our stop definitely 10 pips or 20 pips below Kumo, somewhere here. So yes, the M15 gives us a signal that even if the price is in a consolidation phase, odds are it will go upwards rather than downwards. Thanks for watching and happy pips.